Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Let's get across what moved markets on Friday, and stocks on Wall Street ending higher, boosted by a strong quarterly earnings report from Amazon, which lifted AI-related stocks. Now for the week, the S&P 500 rose 1%, the Nasdaq 1.6% higher, and for the month, the S&P was flat, the Nasdaq having fallen 3.2%. Now, stocks specifically, Amazon surged more than 15% on Friday after posting its biggest quarterly revenue growth in more than 4 years. Microsoft rose, adding to gains after surging more than 15% on the previous day in its biggest one-day percentage gain since 2008, after a forecast stronger than expected cloud growth. And those results alleviating investor concerns about potential overspending on AI data centers. Whereas Apple tumbled more than 7% after warning that supply constraints would hurt growth, adding to concerns that recent iPhone price hikes would weaken consumer demand. Well, President Trump has said the US will hold off on launching further strikes against Iran after other Middle East nations told him they're working towards a deal. He said this was subject to being able to rapidly make a deal which would include the immediate, complete and total opening of the Strait of Hormuz and an end to Iran's nuclear threat. Meanwhile, in the Eurozone, inflation for July rose 2.9% year on year, as expected, with core inflation at 2.5%. US 2-year Treasury yield rose to 4.29%, the 10-year up to 4.74%. Australian 3-year government bond yield futures rose to 4.54%, the 10-year at 5.02%. Markets are pricing in a 5% chance the RBA cash rate, which is at 4.35%, will be hiked by 25 basis points at the next meeting next Tuesday, and a 70% chance by December. The US dollar index was down around 0.5%, and the Aussie is currently trading at 70.4 US cents. Oil prices have fallen heavily after President Trump cancelled his threatened attacks on Iran, as both sides look to reach a nuclear deal. Brent crude down around 6% at just under $83 a barrel. Gold is up around 0.5% at close to $4,070 an ounce. Copper futures are flat. Iron ore up slightly at $97 a tonne. And Bitcoin, it's currently trading at around $63,500 US dollars. Well, let's get across those market moves globally, with the focus also on New Zealand. Matthew Goodson joining us from Salt Funds Management. Matthew, welcome back to you. Let's start on Wall Street then. Interesting what we're seeing there as far as that AI trade is concerned. Obviously the focus very much on some of those mega cap tech results. Amazon in particular, Microsoft, they were positives, whereas we did see some negatives last week, including Meta and Apple also falling there.
Yeah, look, I think the market's really looking for evidence of a free cash flow return on, on the vast capex sums that have been expended by these companies, and punishing those that are not demonstrating that, and rewarding those that are. And I guess the other emerging concern at the moment are the far cheaper, highly efficient Chinese models, which has seen token prices fall. And clearly we've also seen some remarkable market volatility with that major hedge fund implosion last week as well. So it's it's highly volatile, very interesting, but I think if quite divorced from what's happening for most companies in Australasia. Clearly we have several data center companies across the markets, but they're a relatively small driver compared to everything else.
Matthew, you mentioned that AI-focused hedge fund, situational awareness, which collapsed. What is that evidence of for you of what's going on Wall Street? Bearing in mind, where did this come from? And it was led by a 25-year-old with very limited experience.
Well, he's still up 80% year to date. It's a scary thing, although I think all his public shareholdings have been extinguished and those are just marks on the private ones. But look, I think what it illustrates is just rampant liquidity across the sector. So, and I think that was one of the key sources of the volatility last month, where we've seen what's been referred to by some as a Korean barbecue, where over 3% of all South Korean adults actually received a margin call on their holdings, and which are dominated by the chip sector in that market. With the role of SK Hynix in particular. So when it's a classic cycle in many ways. You get something that makes a lot of fundamental sense and will ultimately drive significant fundamental earnings, but then vast liquidity washes in behind that, and you get excess, and we saw some of that excess at least washed out last week and last month.
Korea, that market is something to behold, isn't it, Matthew?
Reminds me of New Zealand in the 1980s.
Yeah, it's like
where every adult owns shares.
Well, but also the costing was
they
up.
own all theirs on margin.
Like you got 15% moves in one session.
Yeah, it's quite staggering, and that's the impact of the margin, Clark. When you have to sell, you have to sell. And that's what we saw. Ultimately, the fundamentals will win, and the fundamentals remain very bullish for the chip sector, but it's also a sector that's notoriously cyclical because it takes vast capex, many years to build new fabs. But once you've built them, they have to operate at 100%. So you'd better hope that there's still the chip demand out there in the future when they all hit. So. Historically, over the last several decades, there have been huge swings in these companies, and we may well be in for those swings again.
Now, Matthew, focusing on this part of the world, earnings season beginning officially today locally, a little more delayed your side of the ditch there. What are you looking forward to?
Yeah, look, it hasn't been the easiest period for Kiwi companies, the June half. The first quarter of it, things were looking really good. The economy was starting to pick up nicely. And since then, we've obviously had the Arun debacle. So, look, I think there may be a degree of forgiveness if there are some slight misses from companies which they can convincingly show came for temporary reasons. And some companies are actually pushing on through it. So, for example, we saw Mainfreight with a good upgrade, which was largely from New Zealand last week. But what we're really looking for are the current trading comments. We're just starting to see a few signs that we've seen the bottom and things are turning up again. So we saw quite a good ANZ Business Outlook survey last week, and we saw a less bad consumer confidence number just come out this morning, which was +8 to about 99.5. So look, there's a few signs here that things have bottomed out and are starting to turn up again, but we just need this Iran, complete debacle to be sorted, and that then really clears the way, I think, for the Kiwi economy to get going again. So results season, I think, current trading comments will be the absolute key.
A couple of other companies I see also you focused on. One in the gold space. What's going on there in the gold sector? Your side, obviously, a lot more than what we're seeing here in Australia, but Santana Minerals is one I see you've got your eye on.
Yeah. Well, we don't really have a gold sector. We have Santana Minerals, which has a very interesting potential mine in central Otago. Be about 12 years of open cut and then underground for quite a few years beyond that. Producing over 100,000 ounces a year, would be well north of 100 million a year in royalties to the government before any other taxes. It's going through a fast-track resource consent process, which they put on hold for a few weeks to gather more information and responding to questions, and they've pressed the go button again on that. So it's one of those things, investors in the market never quite knows what it doesn't know when it comes to various environmental factors. And I think a lot of focus in particular will go in around the tailings dam and the long-term security of that. But assuming that's all okay in a geotechnical sense, it'll be very interesting to see if the country is open to business in the sector or not. So I think it'll be quite important, obviously critically important for the company itself. But quite important in a wider sense as well for New Zealand Inc. As to what the outcomes are.
And Matthew, elsewhere I see AFT Pharma is on your watch list. What's going on there?
Well, it was sort of a star stock last month, up 31%. Look, there wasn't actually so much a lot of new news, but a couple of things happened. One is a paid-for research house in Australia came out with a price target on the stock of about $12.70. Look, it's the sort of thing you'd say is not impossible, but everything would have to go right for it to get there. And what AFT is doing is it's taking a lot of known drug compounds and putting them together in new ways and new formulations and seeking to launch them around the world. So they've got a very deep pipeline of relatively low risk drug discoveries, or not so much discoveries as projects underway. And I've really got on the front foot and held an Investor Day as well to highlight those. Two in particular stand out. One is a iron deficiency formulation, which appears to have the same impact with far fewer side effects, which will be a very significant market. And also they're very well known in Australasia for maxigesic, and they're looking to use that in a hospital setting because clearly there's a lot of issues with with drugs such as fentanyl, which have rather more addictive properties. So it's been a little bit slow on the rollout of that, but it has very significant potential as well.
Matthew, great to get across what you're seeing locally and globally. Thanks for joining us from Salt Funds Management. Have a great week.
Pleasure. Thank you.
Righto, let's take a look at where we're likely to get going. Now, SPI futures indicating we're off by about 1% to get underway. That was where we left the market on Friday. Quite a bit of change over the weekend, of course, given President Trump has pulled back on his threat to bomb Iran further. That did see the oil price fall about 6%. So, look, the only thing to do is watch where we're going to open in just a couple of minutes' time. Stay with us for that.